Thank you very much, Sam. I want to take the time to welcome everyone and thank you for taking part of your workday to talk about debit card compliance. Certainly something that affects every financial institution. And as we analyze our card programs, it's really important that we have a handle on where the pitfalls are, either from a regulatory standpoint as well as from a fraud law standpoint. So to that end, we're going to open our discussion today with a review of the various methods that can be used to process our cards. And we're going to be considering the Visa MasterCard requirements for the acquiring merchant, as well as who bears the brunt of the liability in the event of fraudulent transactions. One of the questions that came up in advance of today's presentation is that the chargeback procedures for Visa and MasterCard are going to be changing in April. And that could certainly impact our Reg E investigations, and it could also impact just our ability to recover in some of these circumstances. So we're going to take a look at that as well. PCI compliance. We may often only think of that when a merchant has a data breach that results in a whole bunch of fraudulent activity. I know that the participants who are in the Central Midwest are dealing with a breach that the grocery store chain Schnucks just recently experienced and the fraud associated with that. So you might think, oh, that's their problem. But we have to remember in many circumstances, the bank is also functioning as an acquirer in addition to being an issuer. And so we have to not only be concerned about PCI compliance and our cards getting out into the wild from merchants, but we also have to look internally to ensure of how we're securing our own data. Also, with it being the middle of tax refund season and our friends in Social Security deciding to issue payment cards to the folks that haven't signed up for direct deposit, we're obviously seeing an increase in cash advance requests right now. And we've seen a whole bunch of questions on how to process these properly, what are our liability risks for processing them, do we have to process them at all? And so we certainly will touch base on that. Also very important is to go through a host of regulations that may only have a line or two about debit cards, but are easily overlooked. And we want to make sure that when those questions are asked in those particular audits, that we have the ability to respond accordingly, that we know how these other regulations are going to impact our card programs. And, of course, no debit card conversation would be complete without Reg E and Visa MasterCard in particular talking about what happens when they don't agree. How do we handle a claim when we have two conflicting lines of rules that we have to follow? And then, as Sam had mentioned, we will take a break in the middle just to give us a chance to digest a lot of what we're experiencing. So to begin with, we're going to look at the process of completing a transaction. And number one on the list, which is going to be of a special concern to a lot of us, is the swipe and sign. The cardholder presents their card to the sales clerk. They swipe the card, the transaction's approved, cardholder signs the receipt, takes their merchandise, and goes on their way. Well, of course, Visa MasterCard says something's supposed to happen in between the gaps that I just left you. When the cardholder hands the card to the clerk is required to examine the card to make sure it's signed. They're supposed to examine the card for any security features that may be on the card. But note there is no requirement for the merchant to ask for identification. And I know this leads to a lot of righteous anger from the banks as well as concerned customers because they see merchants not performing these checks. Some customers will even take an extra security step by putting CID on the back of their card in place of a signature. Unfortunately, it's really an urban myth and a false sense of security for anyone who believes that this is going to combat fraud. Visa MasterCard rules both state that a card is actually considered invalid unless it is signed, and their operating rules direct the merchant, if they're presented with an unsigned card, to ask for identification at that point, as well as to instruct the customer to sign the card. Also, with the aforementioned data breaches, we experience a huge amount of counterfeit fraud. The customer could be in possession of their debit card that says CID, but then still become a victim because there was a counterfeit out there, and the fraudster signed John Smith on the back of the counterfeit, and, of course, a perfectly matching John Smith on the sales receipt. These swipe and sign transactions are really where the greatest liability risk is for the financial institution, because as we know, all the merchant has to do is produce a signed sales receipt. And I've even had banks who have said, we've received signed sales receipts with profanity written on them as the signature. The bank takes the loss here. Now, as I had mentioned, the customer or the Visa MasterCard rules are changing, and we'd had some questions about that. Beginning in April, for both MasterCard and Visa, banks will no longer have chargeback rights for electronically read and processed card-present transactions. So again, essentially what this means is if we have a swipe and sign card-present transaction where we know there's going to be a signed sales receipt, if the bank attempts to file a chargeback, their chargeback will be rejected, and you don't even get a copy of the signed sales receipt like we used to get. So I have a lot of very panicked institutions saying, how in the world can we complete a Reg E investigation if we can't even get a copy of the sales receipt to prove whether or not our customer did it? I'm going to give you two recommendations on how to combat this. First, if the dispute is clearly the result of counterfeit fraud, the transaction has taken place in a completely opposite geographic location from where you are, you can clearly see your customer doing transactions in the vicinity of your institution, as they always have, and then suddenly charges on the opposite side of the country, it's pretty clear there's counterfeit fraud. Is it even worth spending the time and expense to try to get a copy of that sales receipt? Or do you just go ahead, credit the account, close your investigation, and move on? My bigger concern is for the cases of stolen cards where the fraud's taken place in your area, and you'd like to know, was it a family member? Was it someone they had given the card to? Was it a situation like that? Or is it maybe where they did the transaction and simply forgot? Here your options are to either A, try to contact the merchant directly to get some surveillance footage, which they may or may not be forthcoming on. B, the other option is we still have the ability to file a retrieval request. And the retrieval request, they still have to provide us a copy of that signed receipt. Just understand, unlike a chargeback, the retrieval request, we did not receive provisional credit from Visa or MasterCard for the transaction. So we may have to temporarily give the customer their provisional credit, and then whatever ATM settlement account that you use for your adjustments, just know that you've got an outstanding debit entry in there for that. Those are really our only options for card-present transactions from April going forward. And the reason for that, Visa and MasterCard have felt that many issuers use the fraud chargeback for everything, whether it's for merchandise not received, whether it's for a dispute between the cardholder and the merchant, where it's not really fraud because the cardholder gave the merchant the card number in the first place. And so they're just kind of trying to minimize the number of chargebacks that are going through the system, because these fraudulent transactions, the bank's going to ultimately be liable anyway. So it's frustrating. I agree. It's going to have to result in some changes to our investigation procedures, but those are really the options that we have at this point in time. Another type of card-present activity, which we for a long time have not had chargeback rights, is the quick pay or limited amount. And essentially these are going to be your convenient marts. These are your fast food restaurants where all they have to do is swipe the card. If it's less than $15, they don't even have to give the customer a receipt. And there's no signature obtained at all. So here again, we're faced with a customer could say, there are all of these fast food transactions on my card. I didn't do them. And we have no way to fight it, again, unless we want to try to contact the merchant to look at surveillance. And for these small dollar amounts, it's generally just not worth it. The pay at the pump transactions, again, very convenient, but again, no signature. Note that for Visa rules, they allow a customer to pump $75 of gas at once, and MasterCard up to $100. The gas pump may require that the cardholder put in their zip code as part of the transaction, but note this is not a Visa MasterCard requirement. Again, if the transaction is below those thresholds, If it is a